You may go to your bank.
It's the office of the Central Bank of Nigeria's governor, but this time in Lagos State. It's the first time the MPC is meeting here since the regulator moved its headquarters to the Federal Capital Territory. But this does not change the unpleasant fact that economic parameters are not at its best.
It's almost costless, at least today.
At the May MPC in Abuja, the meeting adopted a hawkish stance, joining the rest of the world to hike the monetary policy rate. It went from 11.5% to 13%. Since then, inflation has moved from 17.71% for the month of May to 18.6% for June, a major consideration for the MPC. There's also the huge supply disruption occasioned by the ongoing war in Ukraine and fueling energy costs.
MPC did not even take any look at the issue of whether to hold rates constant or to loosen, because we know some people would have expected that having tightened last time by 150 basis points, some of the analysis we've watched or read is that, look, we should not continue to increase rates because it will increase cost of borrowing, cost of borrowing by borrowers. It may also weaken manufacturing output and the rest of them. We agree, and I believe, and I want to signal, the Monetary Policy Committee is very determined that if inflation continues at this rate, particularly aggressively, we would continue to tighten.
The CBN governor did not mince words when expressing the stance and future decision of the MPC. But even before now, economists have been reacting.
We've been having conversation of what is the assurance that increasing interest rate will actually deal with inflation and not cause a stagflation in the economy. But the MPC has said that it's also taking into cognizance the fact that the CBN is working on developmental financing, and that should be able to balance it.
Finding a balance is the motivation for the CBN's disbursement of 741 billion naira loans so far for the developments in agriculture. 130 billion naira to 176 hospitals, and rebate for the second quarter of 20 billion naira to exporters through the RT 200 program, which according to the regulator has generated about $3 billion as of June 2022.
The limit to what the monetary policy can do, the limit to how much you can use monetary policy to fight, the ills or correct the ills in the economy. What they can do, like I said, is looking at things like interest rates and trying to tinker with the currency. But it doesn't solve the problem. If you don't get the fiscal side of things correct, then you're going to continue to struggle with your monetary policy. Even if you were to raise rates today to, say, 20%, it doesn't necessarily guarantee you inflows coming into the country, because people who come in would still struggle to go out because you have issues on the currency side.
While some economists may not agree totally with the hiking of rates, the coming days will show how effective or not this approach is in dealing with inflation in Nigeria. Ini John Mekwa, Channels Television News.